Hi there, I'm Isaac, and today we're going to continue our conversation about one of the trades by one of AXIA's elite traders from Friday the 28th of February. And so in this presentation, I'm going to talk about how this trader made a reversal. So in the prior trade, the trader was looking for a break of the initial balance low and potential continuation of a move. Here we're looking at when that fails, how we can play a reversal. Okay, so let's get a bit of background detail on this. So on the left, this is a Eurostoxx daily candlestick chart, and you can see here that coronavirus has sent this market into a very sort of like bearish mode, and we've unwound a lot of gains. In the center chart here, we have the daily, or I suppose like the cash session profiles. Okay, these also clearly show that over the week or over the past few days, value has been shifting lower, and the market is obviously reinforcing the fact that the market's bearish. The part here that's really interesting is the relationship between these last two profiles. So here is the day at the bottom where my mouse is circling that we're looking at. So Friday the 28th. On the 27th, there was this sort of double distribution, bearish one, and you can see the market developed value up here, quite ledgy, broke down lower, and then it has continued this move in the evening and in the early morning. Now, this obviously means that the next cash session opens with the gap, and then the first question you've got to be asking yourself, well, okay, can this hold? And if the answer is yes to that, okay, can it continue? And so now let's move to the next chart here, which is on the far left, which is now just the expanded profiles, and in the middle we've just got a profile here representing the trade after the cash session closed, and then the trade early in the morning before the cash opens again. And so what you can see here is that double distribution. Here you can see that ledgy low, the market breaks lower, comes back up, but then after the cash close, but still obviously in the future session, the market finds a high, some resistance, and then starts to offer again, and the offer continues, and we open with this gap. Now, the reason I moved to this chart was to continue what I was saying before, which is about, okay, asking yourself these questions of, can the market hold the gap? And so here you're asking yourself, well, okay, should I be trying to get long now to close this gap or not? And what you can see here is the market has a bearish initial balance, bullish in the sense that the B prints extend higher than the A's. I have mine, so A is the open of this session, but you might have yours set a different way. But anyway, that the second set of TPO prints extends higher than the first, and then the lows are also higher. So this doesn't necessarily mean that the market's going up, but I suppose in this instance it's saying that, okay, the market's testing higher, which is what you want to see with the gap. So the market then tests higher, on the C prints for me, and so these this test higher and then subsequent failure then tells you that, okay, the market's tried high, but the market is really bearish and it's holding this gap, in which case then you're asking yourself, okay, can I find a way to get short for an extension to the downside? Here in this scenario, you could be looking for a continuation. One thing in mind that you've got to keep in mind is the fact this market with this gap is extremely extended, and as you can see from the candlestick chart on the left, that the market has already gone a really long way. So you've got an extended market from the higher time frame perspective that has then got extended in between days, that has then held the gap high. So okay, so you're looking for a test lower, and what we got there was a rejection, and then the market's moving up. So obviously here we can see what happens, but then after failure of the lows in an extended market, that then means that there could be a move back to the upside on, and in this instance, you know, with this extension, if it can't push lower, then the move back has the potential to be pretty big, and so it's worth getting involved in. I suppose, like, at least you should be looking to take out the initial balance high after failing to extend the low with this sort of extended market situation. So if we look at a 1 minute candlestick chart, just to get a bit more color on this, here you can see early in the morning the markets continue to push down, and like I said before, there's this bearish initial bullish initial balance. Getting my bulls and bears confused today, which is not good. Anyway, so we have gone up to test the highs, set this initial balance high, the market's come off. It's had this stops move here where it's gone and pierced initial balance low. In terms of being a false break, I think this is a little bit different, and maybe you should be a bit careful of treating it that way. But anyway, I suppose it does say that no one followed that down and someone was happy to pick it up. So then the market tests high, that fails. Okay, so now the market really needs to you know, go and see what's below the stop, which it does, and that's what the first trade was about. It was about selling from here and looking how you can manage your position to test the lows. Then once it pushes through the initial balance low, it sets up this block, and this block's what we're really interested in. If this market is going to continue to be weak, as it's shown here, so you got, you know, it's made a high, it's pushed lower, made a lower high, pushed lower, made a lower high again, pushed lower, lower high. And so you've got this really weak market that's continuing to show this weakness. Now you are in this block, and we're pushing safe. We're well below the IB low. Sorry, shouldn't have clicked. We'd expect to get some sort of extension. Otherwise, here, as we're going to talk about today, when this doesn't happen, when this fails, there's an opportunity back to the upside. Okay, so just in terms of a summary of the information I've just given you, the market's bearish in the bigger picture due to the coronavirus. The prior day was a bearish double distribution day. The market continued to move lower overnight, so this extended market got sort of extended in the shorter term, and well, obviously open within with a gap above. There's a false break of the IB high, which suggests that the market should test lower. We then had a false break of the initial balance low. So the idea now is that after a false break in the initial balance low, the market's likely to test the upside. So okay, how can we get on that? In terms of access, price action change, that's what we're going to look at initially, to suggest that sellers have lost control. And then for some confirmation, you can look back to see the market holding back above the initial balance low, and that's your confirmation. Okay, that was a really quick run over of the technical landscape, the technical summary of the setup. So we'll just go back to the 1 minute chart and just talk you through what we're going to discuss. So again, we have that same 1 minute chart as before. I've just put a few squares around some important pieces. This white square here is the same as this. This is just an enlargement so that you can see it. Here we've got these two blue boxes. These just show where the videos are, the recordings that I'm going to show you that we'll talk through, the ladders. And the first one, if we just go to the enlarged portion here, is in this area here. So it's where we've pushed lower below the initial balance low, formed this block, and we're looking at the failure of this block. So okay, how does this trade idea get initiated? And then the next part we're looking at is, okay, how can we manage this trade? And so what you're going to see is that the elite trader starts building their position on the break of this block, takes some profit back inside. And so that's, I suppose, saying that, all right, like down here we've got, oh, sorry, what have I done here? Down here we've got an idea that that this market might turn around once we push up. Okay, we can take some profit on this, because worst case scenario, this is just a test above that's going to fail, in which case we can scratch a trade and have some profit to show. If not, then there's an opportunity to run this trade higher. And then just around here, we're just going to look at what happens, or how the elite trader managed their position when the market came back on them. I think this is important because this is one of those times you can get spooked out of your trade, and if that's the case, you've got a good entry here, you didn't want to see it coming back on yourself, and you get out, and then you go on to see it run 50 more ticks to the upside. That really sucks. And so it's just about trying to confirm to yourself, well, okay, have I had a signal to say that I should get out of this trade? If not, then, well, I should stay in it, right? And we'll just talk a little bit more about how you can manage that. So let's change to our ladders. So here you can see a couple of ladders. What we're interested in here is this one here, the second from the left, which is the Eurostoxx ladder. So just to bring you back to perspective, we are below the initial balance low. 81 is the lows of that block that we were talking about, and 93s was the high of it. And so what we're just going to look at here is how the market fails to break lower, and then how the elite trader accesses the trade. So what we can see here, again, as I said, we're near the lows, and we're looking at this time, because we're short from the previous trade, to see the market extend lower, right? And so now here we are coming back down towards low. So we've got some selling to 84s, now down to 82s. All right, so we're down at the lows right now. You'd be getting excited to see this go. And okay, there's a pretty thin bid there. All right, we've got buyers pushing back. We've pushed back up to 84s. Sellers have a pretty small offer, but are pushing back down, but buyers are still happy to buy. Alright, now we're back down at 82s. Alright, my volume is now into 81. And if you notice, there was an extra 50 sold. So right now the market's tensioning against the low, right? So now the pullbacks are a little bit lower, a little bit less, sorry. But now you see the market didn't go then. So we had this tension of the market pushing lower, and then pushing low again, not being able to pull back. But then when we see the market break that tension, then we're thinking, okay, this trade's not on anymore. So now as the trade's released, you notice that we've then come out of 50 lots there. All right. And so still holding short because this could go, but like I said before, with that tensioning at the lows, that hasn't happened, so we've come out of them, and we haven't seen anything as aggressive yet. So right now the bid's pretty thick, so we've got 600, 800 for the front two, and often if the market, well, in this case, is really strong, really weak, I'm getting everything wrong today, opposite day, we should be seeing the sellers come in and be happy to take the bid. So that's another sign of weakness there. So okay, so now the market's pushing out. It's back above 09s. Now the important level here to look for is 93. So that was the top of this block. And right now, okay, we are the market's trading to the price above our price, but that isn't the end of the world, because this trade is still on. You have to treat it that way. But right now, yeah, okay, there's quite a clean bid out of that block. So we just got 92s are bought, 93s are bought. Now trading into 94s. So this is looking not so good. You know, we're not seeing a strong offer here, and there you go. Now the trader's looking to get out and is now flat, and now there's a really big bid for 1,000 lots at 93, so at that block high. So again, that's not getting taken. So another sign of potential weakness for this market. Alright, so now we're trading 96s, and again, this is above this block, 97s. This is not what you want to see here, because you know, there's this market with lower lows and lower highs. You know, there's potentially, you know, part of this extended market that's potentially extending lower. Now that it's gotten back above this, you know, it's got all these traders trapped in this lower block. And so now we're pushing to 98s, 99. So now anyone in there has got to be thinking, okay, this isn't going my way. And so now that's exactly what our traders noticed and has now started to get long. And so the initial balance low is actually at 04s. So we're not yet there yet. But what we've seen here is there's a real lack of an offer, right? So as we've come off that bit where the market tried to tension against the lows but failed, their bids thickened, and it's bid quite cleanly out of this auction block. So right now there's not a lot going for the sellers. And so as another point, there's still you know, two more passive bids there on the screen, so trying to buy at 96s and 95s, but neither of them have gotten filled. So again, that's just another thing to sort of suggest that, okay, the market isn't well, is now strong because we're not getting filled. And again, see here, 98s, 97s not getting filled, so someone's holding 99s. And so I suppose you can view that as quite a good thing. Okay, if you're not getting filled, then that's, you know, just another indicator of how strong the market is. So again, 04s, that's the initial balance low, so the market's pushing out towards 04s now. So again, the bid's relatively thick. The front offer's been quite small. Alright, here we go, we're coming back down to 99, so anywhere down here you'd expect to see someone buying. This is just below there, so we couldn't get filled before. Alright, and now they're paying up into 3s or 4s. So here we are above the initial balance low now. Okay, this is a really good sign. I'm bidding into 07s, down to 08s, 09s. Someone pushed back at 09s, so here taking 50 lots off as you've gone back above the initial balance high, initial balance low. So, you know, if this was meant to be, if this would be sort of like a false break back above and then collapse again, you know, that might happen here. And so we've taken some off to guarantee a profit, because now we're sort of seeing resistance from the market, and again seeing some more selling in here. Alright, and there we go. So now back to, well, half size. Okay, and that is the first section that I wanted to show you. So that was all about, and it's just paused now, that was all about seeing, okay, the failure of the market to break down from that block that it had at the lows. It then had quite a strong bid. There wasn't really anything on the offer. The market wasn't pushing back down. Broke above that block. The elite trader took their position off, their short off, and then after seeing the market hold and failed to offer, that was enough for them to believe that the downside move was off. And so here can lean on the fact that the market's extended. So, sometimes you might want to wait for the confirmation of getting above the initial balance low. But here, there are enough things weighing up to give the trader the confidence they need to get in where they felt they had an edge. And so, then the market's come up and taken some profit on part of that position, back above the initial balance low, and now letting the rest run. And so here you might be thinking, okay, we've false broke the initial balance low, or maybe it's time to test the highs next, and we've seen a false break of the initial balance highs, so we might be looking to see what the market does up that way. So the next piece and the last piece of price action that I want to show is not actually about taking profit at the top. I'll switch us back to looking at the charts, and you see here the next recording that I've got, I've sort of shown where it is here where my mouse is, and the second blue square is where the market actually breaks back below the initial balance low and then rejects the lows once again. So if we look at our enlarged ones, you see we looked here before at the market popping back up here and then taking profit at sort of that 09s, 10s, 11s, and the market sort of sits here, holds above the initial balance low, and then pushes higher, and then it starts to form this block here. So it's sort of trading between sort of 20s and then down to sort of 7s when it's down here anyway, and so then it forms this block for a while, but at one stage it pops back below. And so what I want to talk about here is just about what is happening when the market goes here and does this and collapses. How can you approach this and how should you think about it? And then okay, that's now giving you some more information. How can you use that information in your trade? So let's go back to ladder, and you can see here that now the position is 80 lots. So the trader's taken a bit more profit. We were at 100 last time, and we're still sitting up in that block, so around 11s, and soon we're going to see the market collapse back below the initial balance low and then push back above, and we're just going to watch how that happens and how this develops. Okay, so let's get this going. Alright, so here up at 11s, and we know now this market is going to fall. So let's watch this happen. Alright, so still, there's a bit of a two-way trade here around 10s. Okay, now here we're down to 8, 7, so looking to take a bit of the position off there. Down to 50, so okay, this, a bit concern here, I suppose, that the market might break lower, which is exactly what's happening. There you go, it offered pretty much straight down to double lows, 99, so that's below the initial balance low, and then push straight back up. There you go, some really big volumes on the offer, and you saw that 800 lots there. So if the market's strong, it should be happy to take that, which it did. And now the market's back up at sort of 09s, where the elite traders started to take profit with that first push up. So this is looking pretty good now. So you've just had another false break of the lows, and it got picked back up almost straight away. And then back there sort of 9s where it took off from, or failed from, I suppose, before. We've got another seller there again, or the same seller there. So now let's just sort of see how the market interacts. And so the buyers are holding here at 04s, which is the initial balance low. And so the market's going between 04s and 09s. but what it's not doing is not getting below the initial balance low. Okay, there we go. There is a bit of a hit at market pushing higher, but the sellers are still there. Okay, what about the buyers? So yeah, the buyers are still holding. We're not really getting down to the IB low. It's sort of stopping just above. And then we go bidding through 9s, 10s, 11s. So okay, this is looking good. So we've now broken that seller and now put more on. Okay, again. All right, again. So that seller that pushed us back below the initial balance low has now been broken. So buying where that seller was. Okay, now, yeah, we got average price at 09, so it's pretty much exactly where that seller was, and again 200 lots long. Now long from a high position, but from where we've seen that that seller fail. So now I suppose it's that kind of like support becomes resistance thing, and we've rebuilt the position again, and now that failure of the lows has given us more confidence in the upside. And so the market bid up into the 20s, kind of on its initial push. So, you know, the next thing you'll be looking for is, okay, what happens up there? And so the market's been bidding up, and the trader's happy to buy at 13, so happy to take a little bit more if they can build the position. Potentially thinking at this stage that, you know, after the false break of the initial balance low, that we might push up now that the market might release upwards. And so yeah, that's what we're looking to see right now. But the market's not really getting above these sort of like mid-teens. Alright, through 16s into 17s, but only really small size, just one lot. Okay, there we go, a little bit more. Okay, but still someone's holding this marker here around 16. So we had a seller at sort of 9s, 10s, and now there's a seller at 16s. Alright, the market's dropped back down. Okay, what do the buyers do? Where do they hold? So now you'd be thinking, okay, we should have buyers holding around where the sellers are, or sellers were. Look at that, the market's bid back up a little bit. The market didn't spend a lot of time down by the sellers. Okay, and the market's just bid right back into those sort of 16s. So now traders looking to get aggressive. So putting on extra size up here now with the expectation that, you know, there's been a lot of pressure into these into this level that, you know, we might see this break, and we are, you know, above 16s there, bidding above, so this is a good sign. Okay, so now taking 18s bid, nibbling away at 19s. You know, there's 50 lots of 1941 back, so another good sign. But okay, the sellers have pushed back down. Okay, so 16s is where the sellers were before. We should be seeing the buyers come back in. Okay, there's a bit of buying 16s into 17s, but the sellers pushing back down. We're still holding here, so there's a bit of an exchange going on here. And we're bidding it back into 18s, a little bit into 19s, 18s again. So yeah, so now the market seems to be sort of trying to decide what's going on in between 16s and 19s. And right now, given what we know, this is fine. You know, this is a good thing to see. We've seen, you know, we had this bigger false break, initial balance low, then we had a move down that was rejected, really quickly before, and now above, and we've gotten, we're seeing good bidding comfortably back inside the initial balance. We're in, say, these 20s where we saw the market top out before, so okay, still seeing quite a bit of resistance up here, and so can have a look at taking a little bit of profit up here, but didn't get the fill. Right now, again, I can see, okay, do the buyers hold here? And so those 20s that we were at before, that's where sort of as high as the market's gotten since it broke back above the initial balance low. So that's the level to break now. One thing you notice is now with this buying up here getting aggressive after this, that sort of really quick test back below the initial balance low is that the average price is quite high, and so now we've seen the market offer back through sort of that 16s area, where we were seeing the buyers, we were seeing sellers and we saw buyers step in, and now we're back down to 09s, which is also where we saw support become resistance. So are we holding here? And really this is what we want to see, because 09s is kind of the key sort of last level above the initial balance low. We'd like to see that holding up to show some strength. If we're seeing back on the initial balance low at 04s, then that's would be a bit more worrying. But the market seems to be holding here. We've got 09s offered, now bid, but it's not really getting back below there. And so this, for this trade to sort of really be on, to feel confident about it, then we need to see that hold. And okay, now we've seen the market push back up. And so one of the key reasons I wanted to show this bit of a video is sort of to show that the trade doesn't always immediately work the way you want it to. And I know I'm also guilty of this, of putting on a position and then thinking that it's going to just go to where you want it to go, and then getting out of a trade because maybe in the larger scheme of things you got in at a price that wasn't perfect, and you didn't really want to be being pushed offside like that. But I suppose in those situations there are sort of two mistakes you can make. One is trying to manage and somehow lower the price of your position, which I suppose, like, if you want to try and trade around it, you can, but you can easily dig yourself into a hole. Or the other way is getting out of your position because of this discomfort. But really, once you're in and you're committed, you've got to start to think to yourself, well, okay, where am I wrong? And if I'm not actually wrong, I should be in this trade. So let's just go back to our charts one more time. And so the bit that we watched was we watched the market push back up here. So my mouse is just down in the bottom left. And then on this red candle here, we saw, we found resistance up where it had been found before, tried to take a little bit of profit, but didn't get the fill. Our market came back down. We saw the trader sit there and hold the position, and the market bid back up. And that's the bit here that we watched. And yeah, and so again, the key is that, okay, we never saw it break this. We're still in this block, apart from this one time that we broke it, and we wouldn't really want to see this happen again. And so as long as we're still holding in here, then the trade's still on, right? We know there's a buyer at 09s. We saw this buyer sort of hold this region before. So, now that we've seen it, we saw it sort of hold in this first push back. Now we want to see it hold again, and we are. So that's the confirmation. So there's no reason to come out and then holding it back out. Now, what's obviously the trader does in this instance is hold through the rest of these ups and downs. Again, not in the most ideal position for this, but the thing is the trade's not wrong. And in the end, you've got to think, okay, you're not wrong. What's my downside? Well, maybe my downside is I have to get out below 04. So let's say, all right, your average position that we last saw was 14s, so you're taking a 10 tick loss. That can hurt. I mean, it's not ideal. But then if you look at it from the other side, okay, what's my upside? Well, the initial balance high is at 50s, so maybe you're not going to take it all there. Maybe you're going to take it some profit on the way up, depending on what you see. But you've definitely got the opportunity there to make far more than 10 on the upside. I mean, even if you're already 5 ticks on side when that seller at 20s breaks, so then you get a bit of a pop through there, and that might get you up to 15. So already you're sort of starting to see asymmetry. So the upside, I don't want to talk to you obviously have to go and discover it. You're trading a little bit off price action here, but you've had the signs of an extended market that couldn't trade down, so you've now got reason and energy to turn it back around. You've seen another failure below the initial balance low, that 10 ticks. The probability is really in your favor, and so now that's sort of the key, that okay, right, you've got this kind of setup, and now just lean on those facts and sort of remain comfortable and confident doing that, and just sort of remind yourself that you can't get out of the trade until you're actually proved wrong. And here, the market's still holding on 9s, so you have no reason to exit, so don't exit. And so then this brings us to the key takeaways. So okay, extended markets can give good opportunities for trade reversals, so that's what we saw here. Okay, we've false broke the low. Now we want to see what the market will do above. In this instance, and I suppose every instance, okay, the first sign of this reversal is a failure to offer. So the market pushed through the lows. If this market's going to keep going, you'd want to see it continue to be weak. It wasn't, so the buyers came in and showed some strength. So then that's your first clue. Okay, you might not necessarily be able to buy instantly off it at the lows, because you don't know if that's the buyers sort of just pulling back to then sell again at a higher price. But that's your first hint. Then when you see the sellers overwhelm the price that the sellers were selling from, so the resistance within the auction block, okay, there's sort of the next layer of that clue. And then we see this price action, so bidding out and not really offering back. Okay, that's where the trader got long this time. So now I had sort of 3 pieces of information that all fit into this bigger idea of the fact that we have an extended market that could reverse. And then once you're above, the next thing you're looking for, okay, can the buyer hold the market? So in this case, yes, we had a buyer holding 09s. Used to push back below, we got picked up immediately, which is a really good sign. And then sort of the last thing to remember that I've noted here at the bottom is that once the market makes a false break, the probability shifts. So, okay, in the bigger scheme of everything that happened on this day, the market false broke the high, probability shift to the lows. Okay, so now we're looking for continuation. The continuation fails, and so now we've had a false break of the lows. Now the probabilities have shifted to the upside. So there's another reason, to get involved. So in this day, there's actually quite a few things going on and quite a few opportunities to trade for what turns out to be a reasonably kind of compact day. So yeah, I hope you found that interesting, and yeah, really all I wanted to do there was to focus on the price action and the signs that you can get from that, and then how that feeds into your hard time from idea, and how you can use sort of each of those pieces of information to give yourself the confidence to hold a trade, even when your say your average price might not be ideal and you have to sort of sit through and wear it for a while. What can you lean on to give yourself the sort of comfort and confidence to do that, because bailing out of a trade that is still on just because you're uncomfortable switches your expected value suddenly from being positive because the probabilities are in your favor, and also you've got a good opportunity to make a good win, to now having a negative expected value because you haven't let some of your good opportunities play out. So yeah, I hope you found that interesting. Thank you for listening.